Good morning. Thank you guys so much for tuning into today's live stream. It is July 24th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So Thursday, July 24th, we have unemployment claims, flash manufacturing PMI, flash services PMI. And these are probably the most volatile news, or I guess important news coming into this week. Unemployment claims actually is lower than forecasted, and it actually went down by 4,000 compared to the previous month. And so this is indicating a pretty strong labor market, right? And with this that came out, I think this is really going to only fortify and kind of back the idea that the Feds aren't going to cut the interest rates coming into this July meeting next week on Wednesday, July 30th. And yeah, so this is crucial here. If unemployment claims were like higher than expected or whatever, then it could have suggested the idea that the Feds do have an incentive to cut the interest rates. But with the labor market where it's at, this is better than expected, right? And yeah, we don't really have anything else besides these three things that I mentioned. Flash manufacturing PMI, flash services PMI are going to be released in about like 9 minutes or so. So I'll come back for the data on that. But to begin today's actual technicals here, the first thing, or I guess the first time frame that I do want to take a look on is the daily. And so I'm always analyzing here. Okay, so this is how the daily candle closed here, right? The previous daily candle on Wednesday. With the way that we closed here on this daily candle, you know, you can make a few assumptions. It's a bullish candle. It closed bullish, right? And notice where we closed. The question that I instinctively tell myself now is, so the blue line is where we close. All right, so you want to ask yourself this question whenever you take a look at candles, right? Is the closure, which is the blue line, is it closer to the high, which is the red line, or is it closer to the low, which is the purple line? And so with the way that we closed here, yesterday's candle, the closure of yesterday's candle is closer to the high of the candle, right? And this assumption allows me to make the idea that within the next daily candle, we should minimum, like low-hanging fruit, is that we should at least take out that daily high. That is all that I am really aiming for, right? Because that's enough like information, I guess, for me to benefit off of. If I can make the assumption that we should at least take out the daily high, I can structure a trade around that, but I'll get more into that later. But yeah, so that's my bias, or I guess that was my objective coming into today. We ended up taking out previous day high during the Asian session, and because we took out the daily high, that means that our daily objective has been completed. And so coming into this morning session today, I'm not going to be utilizing the daily time frames for a bias, right? I'm not going to be forcing any ideas, because the daily candle closed bullish, right? Its objective has been completed. And so I'm going to utilize the intraday time frames, the 4-hour time frame, the 6-hour, the 8-hour, the 10-hour for a intraday bias. And so my approach here coming into today is to utilize this 4-hour candle and to utilize this 8-hour candle once those two candles closes in about 20 minutes or so. And the whole idea is the same concept, right? It's the same concept that I'm going to apply onto the daily time frame. I'm going to ask myself, is the 4-hour closure closer to the 4-hour low, or is it closer to the 4-hour high? If I can answer that question, then I'm going to have a bias, right? And I don't want to say anything too soon. We have 20 minutes left, but just apply those same concepts to the 4-hour time frame. Same thing here on the 8-hour time frame. Is the 8-hour closure closer to the low of the candle, or is it closer to the high of the candle? Once you're able to answer this question, then you can have an idea of what the next 8-hour candle should do, right? What is the next 8 candles low-hanging fruit? If we close bearish, then the low-hanging fruit would be that prices should at least take out the 8-hour low. Same thing on the 4-hour time frame. And so I do the same approach here on every single time frame. On the 1-hour time frame, I can ask myself the same question: is the hourly closure closer to the hourly low or the hourly high? And the lowest that would go is the 15-minute time frame. You can apply these. It's fractal. Prices is fractal, and you're allowed to have these you're allowed to have these similar concepts, because prices is fractal, right? Every single time frame here, every single candle here on the 15-minute time frame has its own objective. Same thing here on the hourly time frame. Only difference is that it may take a little bit longer for one candle to close compared to another, right? And so that's kind of like utilizing every single time frame to its fullest. But yeah, so that's kind of my idea coming into the morning session today, is to utilize the 4-hour candle closure and the 8-hour candle closure for a morning objective. And the 6-hour candle here, it's gonna close at about 12 p.m. Eastern time. And once that candle closes, I'll have a new objective as well. And the whole idea for whenever I do take a trade is that, am I able to stack biases on top of each other? And I'll get more into depth about this whenever I do a trade review. But for now, because I'm waiting for the 4-hour candle and the 8-hour candle to close, I'll just go over some of the pros and cons. And if I have time, I'll go over a possible trade here from previous week. Alright, so if you guys can see here, some of the pros and cons from the week of July 14th to July 18th. The first thing is for me to continue to take consistent setups. Every single setup that I take is going to have 3 core components every single time. It's going to have a higher time frame objective, a model, and a entry pattern. That's like the core components of a setup every single time. I'll go over like the meaning of this whenever I do a review, but just keep in mind that every single setup that I take is going to have these 3 components, and me requiring these 3 components in every single one of my setups keeps me consistent. If I'm ever taking a trade and I don't have a entry pattern, I am going to cancel it, and I'm just going to sit on the sidelines and watch what prices does. If there's no model, I would do the same thing. I have to have 3 of those things. It has to be 3 out of 3. It can't be 2 out of 3. It can't be 1 out of 3. It has to have those 3 components before I even press the button. The second thing that I want to go over is to make sure that the entry pattern of choice, and for me it's going to be fair value gap, could be treated as a entry pattern, right? For me, sometimes there's fair value gaps that get treated or should be treated as a breakaway gap, and there are some fair value gaps that could be rebalanced. Being able to differentiate between a fair value gap that could be rebalanced and a fair value gap that should be treated as a breakaway gap gives me a lot of insight on if I have an entry pattern or not, right? And another question that I do want to bring up is whenever you are in a trade, you want to ask yourself, is prices respecting the consequent encroachment of the fair value gap? Consequent encroachment is it's just a more, it's basically the midpoint of a fair value gap. It's just more fancy. But you want to ask yourself that question, right? If prices does ever disrespect the midpoint of a fair value gap, then that could tell you that prices isn't as strong in that specific direction as you thought prices would be, right? Fair value gaps, essentially, they show you where there has been displacement, and displacement, you can almost equate that to strength, right? Momentum. The best example that I could give whenever you are interpreting a fair value gap is whenever fair value gaps are created, it's almost as if you drop a elephant into a kid-sized swimming pool, right? So when that does happen, water is going to overflow from the pool, right? It displaces away from the pool. It's going to seek more volume, and so that's essentially what fair value gaps are, right? They show you where there's been a lot of strength, almost a lot of momentum in a specific direction. Sometimes the strength is I guess high, and it causes those fair value gaps to be treated as breakaway gaps. But there are some occasions where those fair value gaps could be treated as gaps that get rebalanced, and those are the gaps that should be your entry pattern. You don't want to treat a entry pattern, or you don't want to use a breakaway gap as your entry pattern, right? And that's the second thing. The third is to utilize every single time frame to your advantage. I basically gave you guys a rundown on what that is, what that means. Utilizing, not only the daily time frame, but the 4-hour time frame, the 8-hour time frame. All of those time frames are beneficial, right? They're going to benefit you a ton. And so it just reinforces the idea that, like, this whole pro right here, it just reinforces the idea that time is fractal, and that you can pivot from different time frames if a time frame's objective has been completed. The last thing that I do want to mention for the pros and cons is you want to pay close attention to SMT. SMT is essentially, you're looking at the relationship between correlated assets and seeing if there's been any divergences between the two or three correlated assets, right? So ES and NQ, they are correlated assets, meaning they should be moving alongside one another. If ES is going higher, then NQ should be going higher. And the idea is that there are going to be times where there's an SMT, right? Meaning, like, for example, ES, we have taken out this swing high. And look at where NQ is. We haven't taken out that high yet. So this purple line here on NQ, we haven't went past it. Whereas on ES, we did go past it. That's an SMT. And sometimes whenever there are SMTs, it gives you an idea that, or it presents you with this idea that prices could reverse here, and that it would make sense for prices to do so. It's just an idea, right? And yeah, so that's SMT. And to really sum things up, here is a list. Take consistent trades. Like I said, every single setup that I take is going to have 3 components: higher time frame objective, a model, and a entry pattern. Second, you want to watch closely between the relationship of NQ and ES. SMT shows you where there has been manipulation. A quick note is that if there is SMT, then you have to incorporate the idea that prices could reverse. And if there's no SMT, then it's more probable that prices will continue in a specific direction. Third, be proactive, be present for any, possible or opportunities that could come up. And if they do come up, be sure to seize the moment. Fourth, pay close attention to the entry pattern. Whether you want to determine whether or not the fair value gap should be treated as a entry pattern, or should it be treated as a breakaway gap. Last but not least, I need to, and I will, journal every single one of my setups, every single one of my executions. And I'm going to do my best to try to record every single one of my executions live in order to really get a grasp of how I kind of manage myself during a setup, during an execution. All right. And so with that's that. We have about 5 minutes here or so until the 4-hour candle closure. I'm still going to give it some time not going to really confirm a bias here yet, but I'm just gonna wait and see how we do close here on the 4-hour candle and the 8-hour candle. That's gonna give a lot of that's gonna give me a lot of like information on what we should do. It's been a while since I've hopped into a chess game, and I think I'll just hop into one. It's just so that I can spend some time doing something instead of just oh my gosh, what am I doing, dude? That's trolling. Just go here. I think it's best for me to just, because he's attacking this square here, right? So I can go here. Hmm. 1 minute left. with the way that we are closing here, to be honest, on the 4-hour candle and the 8-hour candle, I don't necessarily have a bias. It's indecisive closure, and it's completely okay for me to have or not have a bias, right? I think my best approach here coming into the morning session would be just to be nimble and really just, yeah, it's just to be nimble. So yeah, I think with the way that we close on the 8-hour candle, 4-hour candle, no bias. Oh wow. I think I have a checkmating sequence here. I think I missed it. I know. Oh, you can just go here. Alright, that's, oh my gosh. Okay, I think I would. We missed. Missed the fact that oh my goodness. What a match. What a match. I have 18 seconds left here. Okay, I trolled. I think I had that game in the bag. Yeah. Nothing for me to really force here, to be honest. No bias on the 4-hour candle. No bias here on the 8-hour candle. And yeah, I think it's gonna be. I think my approach coming into the morning session right here is just to be pretty nimble, be patient. No need to really force an idea, right? With the uncertain closure on the 4-hour candle and the 8-hour candle, not really. Nothing for me to really force here. All right. So I did promise that I'll go over a potential trade from last week, and I'll go over it here today. So the first thing that I always start off with whenever I am scanning for potential setups is I am always looking for a higher time frame objective, right? I'm looking for a big reason for why prices should be continuing in a specific direction. Imagine the higher time frame as a magnet has a big magnet that is pulling, in this case, prices towards it, right? And so my higher time frame objective here is based off of this daily candle closure here. The daily candle closure is suggesting to me that within the next day or during the next daily candle, we should take out the previous daily low. So just look at this daily candle and tell me, is the daily closure closer to the low, or is the daily closure closer to the high? Objectively looking at it, you can frame the framework that, hey, we should take out this daily low. And so that's my first higher time frame objective. Typically there's only one higher time frame, but in this trade, this setup, there's actually two. And so the second higher time frame objective, the second big reason for why I want to see prices continue lower, or I guess trade lower here, is based off of this dealing range from this swing low right here to this swing high, which are those two blue lines, right? And the idea is that in a dealing range, there's going to be a discount portion and there's going to be a premium portion. Discount is anything that's below the equilibrium of the dealing range, and the equilibrium is the midpoint of a dealing range. So anything below that equilibrium is discount. Anything above the equilibrium is considered premium. And the reason why I bring this up is that prices here from this swing low to this swing high, we haven't had the opportunity to trade back into discount yet, right? And so the fact that we haven't had the opportunity to trade back into discount means that there is an urgency for prices to give that opportunity, right? It's good that we are selling here. In this case, I'm bearish in premium, and I'm targeting a low-hanging fruit, which is the discount level of the dealing range. And so those are my two reasons for why I want to see lower prices. I want to see lower prices because this daily candle here is suggesting lower prices, and I am reinforcing that. I'm backing that idea up with the idea that we should retrace back into the discount level. And so that's the higher time frame objective. Like I said, higher time frame objective, see that as like a bigger magnet, a big magnet pulling prices towards it. The second thing that I look for after a higher time frame objective is a model. A model is essentially like, how are you going to align yourself with this bearish higher time frame order flow? What are some ways that you can align yourself with that, right? And so the way that I align myself here is take a look at this 4-hour candle. This 4-hour candle closure here, it closed bearish, and you can make the assumption that we should take out the 4-hour low. And that's in alignment with the bearish higher time frame order flow. And so now that you're combining pieces together here, the 4-hour candle, the 4-hour time frame is suggesting lower prices. Same thing here on the daily time frame, which is suggesting lower prices, and for us to retrace back into the discount of the dealing range. One thing that I do also want to like draw your attention towards here as well is notice how the daily low is different than the 4-hour low, but both time frames, the 4-hour and the daily, are suggesting lower prices. the way that you can interpret this is that within the next 4-hour candle, we should take out the 4-hour low, which means that we should trade lower to take out the 4-hour low. But not only should we take out the 4-hour low, but we should expand lower towards the daily low, towards the discount level of the dealing range. And so the 4-hour low could also be seen as like a magnet in prices, right? It's a smaller magnet like here, and it's pulling prices towards it, right? After we attract prices to that magnet, there's that bigger magnet, which is the higher time frame objective, which is the daily low, which is the discount level, and it pulls prices lower towards that higher time frame objective. And so now that I have a higher time frame objective and a model, the only thing I need left is a entry pattern. Here's a closer look at what's going on here on the lower time frames. Daily low, 1 hour / 4-hour low. We're in alignment, right? And so my entry pattern here for a 1-hour model, which is the 4-hour model, is based off of this 30-minute fair value gap. This 30-minute fair value gap supports the idea of lower prices. Remember the idea. Remember what I stated about displacement fair value gaps being my entry pattern? Well, this is me utilizing it, right? Displacement, there's strength to the downside, and this fair value gap could be rebalanced. So I'm not treating this as a breakaway gap. I'm treating it as a gap that could be rebalanced and should be respected for us to see a continuation lower. So this purple line or set of lines is what I want to see in prices, right? I want to see us open. I want to see us rebalance into the inefficiency, the fair value gap, and then I want to see us go lower towards the hourly / 4-hour low, and I want to see us expand lower towards the daily low and the discount of the dealing range. So let's see what happens here. Here you notice we rebalance into the 30-minute fair value gap and we continue lower. Here's a closer look at what happens. So we open up here on a new day, essentially a new 4-hour candle. We trade up, we rebalance into the 30-minute fair value gap. We begin to expand lower. We take out the 4-hour low. Like I said, this is not the stopping point, right? I want to see us continue lower, and I want to see us pull towards the daily low. So you see here, we're beginning to see lower prices, and bam, we take out the daily low. That's my objective being completed, and that's essentially like everything that I look for, right? Higher time frame objective, model, entry pattern. Hopefully that gives you guys a good idea of how I view prices. And yeah, thank you guys so much for tuning into today's live stream. Until next time, be safe.